Why don't we start there in Europe? And, we're looking at this wall of tariffs that could come into play. Where do you think tariffs eventually end up?
Yeah, I think this is a move on the chessboard. China is now the world's largest, not only the largest car market, it's the world's largest exporter. 1 out of every 5 cars made in China is actually leaving the country and being sold elsewhere. And obviously, big markets like EU are a target for China to grow into the regions of the world. And governments that represent countries that have an industrial base in automotive are moving to protect by erecting these tariffs. But what's interesting about the European action is it's only on battery electric vehicles. China actually exports far more gasoline-powered vehicles to other markets than they do EVs. And there's a significant component of exports from China that are actually made by multinational companies like Tesla, like BMW, like Renault. So they didn't put up a wall to keep it out entirely. I think it's actually a positional move to get some of the production in China moved closer to the European Union.
Yeah, and do you think then that means it's the best case for Chinese EV makers to avoid tariffs in Europe? I mean, we've already seen the likes of BYD, CATL, for instance, setting up capacity in Europe. Is that the strategy that's going to work moving forward?
Yeah, well, first of all, I think the European region, being also very interested in an important part of its industrial base is automotive. If the world is prioritizing electrification, right now you need China to democratize the EV. That's what it's done here in China. And electric vehicles represent more than a third of the market here in China. European companies are very much dependent on the supply chain from China. So CATL, BYD are the 2 largest EV battery makers in the world. They need some of the investments to come into the European Union to secure the supply chain, in particular for the batteries.
Yeah, and Bill, just to follow up on Bell's question there on increased capacity in Europe from Chinese EV names. I mean, you're on the ground in Shanghai. Is there a sense that that is the direction that other car makers and other parts of this value chain are looking to follow? More capacity, more capex in Europe?
Only if there's significant demand, right? We're looking at a market for expansion. You're not going to put up a factory unless you've proven that there's enough demand for your products. And there's only a handful of companies that have reached that point. And it's very clear that if you look at the EV tariff regime, the lightest tariff is placed on BYD. BYD is probably the one that they need the most as an investor into the European Union because they need some of their technology and capabilities. Geely gets a lower tax because Geely owns Volvo, owns London Taxi. So Geely has significant investments in Europe. So the companies that already have made moves to Europe are given favored status. It's the other companies that have not proven themselves yet in Europe that are on the fence. Companies like MG, which is owned by SAIC, for example.
So those companies that don't yet have that presence in Europe, are they going to be a little bit hamstrung? Is it almost a case of too little, too late? Because we've seen the EV shift in Europe slowing.
Well, I think it's slow. It's slow because they're not democratized. They're too expensive. And that's why you need the Chinese supply chain. The world's biggest and most scaled market for EVs is actually able to sell EVs below 25 and actually in many cases below 10,000 US dollars equivalent. If you made them affordable, the more people would buy them. And I think that's why a move of China's supply chain closer to Europe is needed in order to achieve the decarbonization goals that electrification offers.
Right. I mean, the other side to the same coin, Bill. I mean, the Chinese word for opportunity is also the Chinese word for crisis, right? So cheap cars abroad, that's a good thing. But domestically, for example, they're just cutting prices to maintain market share. Do you see a bottom at all soon on these price-cutting wars in China?
Well, the price cutting in China is because this is pool play in the football game. It's the attempt to beat each other to try to eliminate some of the weaker players, and I think that's what's happening in China. In fact, the first shots fired in the price war were fired last year by Tesla, who I think Tesla and BYD now are the leaders in the EV race, and they're trying to squeeze out some of the competition. Another motivation for China to go outside of China is they get better pricing because there's less EV competition outside the country, and they actually get significantly higher margins from vehicles that they sell in the EU.
Bill, so I'll put you on the spot there. So this list of car makers, let's say there are 10 car makers in China. You mentioned some of the weak players. There's a lot of talk about the need for consolidation. Look at this list. Give me tell me what this list looks like in 5 years. Which car maker disappears from that list, Bill?
Well, I'll tell you who makes it. BYD, in terms of being global companies, BYD, Chery, MG, which is owned by SAIC, Geely. And interestingly, every one I just named is not a startup. These are legacy car makers that have cash flow from their gasoline-powered business. They were making gasoline-powered cars before they made EVs. So there's this prevailing notion among investors that you have to look for the next Tesla. And in fact, in China, the companies that are leading the charge in the electrification race are legacy automakers. I would put a couple of other names on the list. Xiaomi, who just entered the market and are selling quite well, known for their handsets and their smart devices. And the other big name popular name in China are the extended range EV companies, which is Lixiang, Li Auto, and Huawei, which uses a brand called Aito for their products.
Bill, you've mentioned Tesla a couple of times. Wanted to get your views on those recent production numbers that we had from the company, a bit better than what had been expected by analysts. The stock surge tells us that some, at least, are saying it's out of the woods. But do you see that being the case for the company?
No, they're not out of the woods yet, especially in China. They're actually struggling with an aging portfolio here in China. The Model 3 was refreshed and hasn't really picked up significantly in sales since the refresh. The Model Y was launched in 2021 here and hasn't been updated. And I think to maintain their momentum in the market, they've had to go to a decrease in price. So whatever volumes they're hoping to sustain, they haven't been able to achieve them, and they've taken a margin hit. So they're not out of the woods yet. They do make more than 50% of the cars they sell globally are made in China. And the EU trade action does provide a 21% additional tariff on made in China Teslas, a lot of which are sold in the European region. So I think what will happen, a consequence of the tariff, is Tesla will have to rethink where they build their cars, perhaps prioritizing Berlin for the Model Y production.